Hello and welcome back to the channel. In this edition, we're going to review the investor presentation of one of the logistic companies. Logistic really has taken a big turn in the way it operates and the mix of how road and railway is going to pan out in the future. So the current mix of road to railway network in India, so the way the goods are transported, is that railway currently holds around 25 to 26% of the total logistics being transported within India. And this mix is going to change because there's a huge change that is happening, and there are talks of dedicated freight corridors, and a lot of work has already begun, and a lot of work is also in the pipeline. The primary aim of the dedicated freight corridors is to get the logistics in place. One of the major goals of the dedicated freight corridors is to get the average speed of the malgadi, as we call it, the train that carries the goods from one location to the other, from ports to the manufacturing facility, or coal from where it is mined to the ports. So all the export and import activity, and even the domestic transportation from moving goods from one part of India to the other, is going to take a huge fillip, because there are now dedicated tracks for goods train. The average speed of the goods train in India right now is 25 kilometers per hour, whereas in China it is around 40 kilometers per hour. And this has a huge impact on the way, on the cost of the goods, on the way money rotates for the exporters and importers, and an increase in the way goods are transported, or the speed of goods being transported from 25 kilometers per hour to 40 kilometers per hour, is going to have a huge impact on cost of goods sold, and also the profit margins that are generated by exporters and importers, and also the rotation of money that happens within the economy. So very interesting company popped up, Gateway Distriparks Limited, when I was going through some of the logistics company. Now, I didn't look at it as a theme. Like, I never go at stocks from a proper top-down approach. I always take it from the bottoms-up approach, meaning that I look at the financials and I look at those kind of things first, rather than look at a mega theme, or whether it's a solar or whatever. Because I believe businesses, a good businesses with good moat, will definitely outperform the ones which are even in mega themes but not that great businesses. So this company was started out in Mumbai. It got listed in 2005, and the name Gateway Distriparks. So I'll just break that up. Why the name Gateway Distriparks? The promoters of the company were sitting in Taj Kolaba and looking out of the window, and they saw that they were looking at the gateway of India, and he was an importer, and he was facing huge issues because of logistical challenges. So he thought of venturing within this segment, and hence the name Gateway. Distriparks means distribution parks. So within logistics segment, whoever is involved, they would know that once the goods come into the port, there are distribution parks from where it's transmitted, and there are dedicated stations. And so we'll have a more deeper look into the business and what this business entails, the numbers. But first, we'll try and understand what the business is. So Gateway Distriparks is India's leading multimodal logistics company. It services across the value chain of multimodal logistics. It has network of 10 container terminals. The fun fact is that Gateway Distriparks also owns 42% of Snowman Logistics. It has bought 4.5% within this fiscal, and what it is doing is all the cash that is coming into the business, it is trying to utilize it. It is utilizing it to buy parts of Snowman Logistics. Now, Snowman Logistics is, as the name suggests, Snowman is in refrigeration. So the logistics related to fruits and meats and those kind of thing. And there's a network effect by acquiring Snowman Logistics. So within this year, they have increased the stake by 4.5%. And the promoter believes that as more and more cash comes towards him, he will further keep increasing Snowman Logistics. The idea is to create Snowman Logistics from a associate company to a subsidiary company and go above 50%. So It is strategically located to serve all the major industrial and manufacturing zones of India, as a large fleet of trains and trailers aligned with Western dedicated freight corridor. Now, these are being put out into the investor presentation of logistic companies, because this is going to be a huge game changer. So the road transport, the trucks and everything, we know how unorganized it is, and there are a lot of startups working towards creating organization within the road transport. But trains are a much feasible method of transporting goods. First of all, it is because of the electrification of trains. It is also better for the climate in terms of emission of carbon house gases, and also trains are a more cheaper method of transporting goods. In the news, we recently saw how Amazon was able to transport goods using the Varanasi river, so the river that is originating from Varanasi, and was able to use inland waterways. So inland waterways is the cheapest form of transportation, and from there, then we come to the trains, and then roads, trucks. Because trucks, what happens is a lot of when you cross all these uh, borders, so you have to pay a lot of under the table money, and sometimes the trucks are going through treacherous terrains, and it may flip, and accidents may happen, and a lot of under the table money is being paid by the owners while transporting goods via a truck from one point of India to another. Although this currently is the major source of how goods are transported, but things are beginning to change, and things will change in the future. So Snowman has rail-linked inland container depots, which is also called ICD. It is a strong and early mover advantage in creating a network of ICDs catering to northern markets and offering hub and spoke model of operations. Concor is one of the competitors of Gateway Distriparks, but Concor is is competing with Gateway Distriparks in the Ludhiana market, and a lot of markets where um, Gateway Distriparks is present. Concord doesn't even have a presence. So, and Concord has been in the limelight in terms of where the share is going and how the business operates and those kind of things. So, um, the tussle between both of them will be interesting to see. The business is aligned with the Western Dedicated Freight Corridor due to improved transit times and modal shift from road to rail. Also, the business has a lot of land bank, and and as we'll see, the price to book ratio for the business is very favorable. It's around 2.5 times, but that's what I can recall. But we'll quickly have a look at that as well. So that is not that high. The price to earnings is also on the lower side, and the way shift is happening, and the logistics segment is going to be operating, and with the acquisition of Snowman Logistics, it is really creating a network effect, which I think would hold the stock in good stead. So it has ICD catering to the EXIM business. EXIM is the export and import business, and these are located in Gurgaon, Faridabad, Ludhiana, Ahmedabad, and Kashipur. So the company operates 5 container freight stations, which caters to Nhava Sheva. Nhava Sheva has a huge port used for the export-import activities within Chennai, Vishakhapatnam, Cochin, and Krishnapatnam. It offers various services like container yards, container handling, transportation, storage, bonded and general warehousing. The important source of revenue in the CFS business includes handling and transport terminal services, warehousing, cargo, and consolidation. Now, what the business is trying to do is business by FY26 is looking to monetize close to 150 to 200 crore of land banks, and also businesses where there is a lot of flow. So it has a quite a lot of land banks, and it is looking to do that. It had debt close to 300 to 350 crore, and it is looking to repay that debt through this, but it is also looking to make further capital investments. So the debt repayment is something that requires to be washed out. The debt to equity ratio currently is at 0.26, which is not that high, but I think investment within expanding capacities will be important in creating barriers of entry, and to allow less and less private players to come in and create a foothold, because obviously not like money can move um businesses out of Gateway Distriparks because it takes time. So once the money is deployed, it'll take good 8 to 9 years for a competitor of Gateway Distriparks to really come and start taking its market share away. So these are the listed service offerings. Within rail transportation, ICD and CFS that we talked about, warehousing and road transportation. Mr. Vijay Kedia owned Aegis Logistics, and we have seen what has happened with Aegis Logistics over the years. And he had it when the economy from 2003 to 2004, and he held it right through 2020, and he created 200x on the investment for Aegis Logistics. So over these long periods of time, he was able to create value. And India's economy is set to double within the next 7 years. So what happened in the last 77 years, in the last years of our independence, is going to happen in the next 7 years. So you can imagine the economic activity that is going to that is going to happen, and logistics is going to play a pivotal role. So as we know, in foreign countries like Germany, there is like courses on supply chain and logistics management, and um, they take their logistics really seriously because they have a lot of goods to move. They have the Mercedes Benz and the likes to move from the manufacturing facilities in Germany or wherever they are to the ports and then to all over the world. So their economy is hinged on very efficient methods of supply chain and logistics. So this will be a very interesting space to watch out for I think for the next 10 to 12 to 13, 14, 15 years. Definitely it is an interesting space to watch out for. So within the road transportation, so they have also they have end-to-end service. So not like they do not have road transportation. So they have last mile connectivity. So they start from rail transportation, and any goods that is then dropped into a particular place, they also have the road transportation to carry it to the eventual um, place where it is required. Everything is GPS enabled tracking and route planning. So they're utilizing technologies to improve the way logistics are happening, and a lot of value added services are being added into the business. So the facilities is divided into these locations. So Ludhiana, Gurgaon, Kashipur, Faridabad, and it is very perfectly aligned with the Western Freight Corridor that is present within this segment. And as I was talking about the land parcel, so as you can see, Gurgaon and 90 acres of land and 60, and Kashipur 41 within Uttarakhand. So some of the land parcels. So 43 this 43 acres of land is what they're trying to utilize to sell it off, to monetize that asset, because as you can see, the installed capacity is not that high, and also Krishnapatnam, they would want to monetize that asset because it would help them in repaying the debt and also fueling their further capital expansions. So in terms of installed capacity, Gurgaon ICD terminal is the highest. In terms of CFS business, Nhava Sheva is the highest in terms of TEUs. Jaipur, they are coming out with another facility. So 125,000 TEUs. In terms of asset base and what do they have? What are some of the machinery that they have on which depreciation is being carried out? So Snowman Logistics, the associate company that it owns, faces huge depreciation on its asset for the freezing warehouses that it has. And if you look at the return capitals on Snowman Logistics, you will observe that those are in single digits. But what the management is indicating, that in the future, the ownership of the assets is going to be in a mixed manner. So it's not going to be right out ownership of heavy assets. So that should push the return capital ratios from the single digits to the higher to the mid 10, so 14 to 15%. So let's see. I think that'll be interesting to watch out. I think that they have reach trackers, trailers, and forklifts, and hydro cranes and trains, and these are the key metrics. The capacities that they have on ICD, CFS, and total warehouse capacity. So 162,000 square meter of total warehouse capacity. They have 31 train sets and tractor trailers and reach trackers and hydro cranes and forklifts. So significant investment within the equipments that they own. So any new player that is coming in should face an issue in not only developing those equipments, because outrightly it'll be a very expensive purchase, and then to also look at how to utilize it in an efficient manner. So new entrant, definitely, I think 10 years is something which the new entrant is have to look at, because it's not like any other business where you come in, you throw in a bit of cash, and then all the business comes out. It's not like if Zerodha is there and Geo Financial comes and offers low brokerage, a lot of business will start moving from Zerodha to Geo Financial. So something to think about, like while selecting stocks, how strong is the barrier to entry? Do let me know in the comment section. This is my assessment, and I may be way off. I reserve the right to be wrong, because it is on the basis of the information that I have at this point in time. But obviously, I'll keep adding to that information. I'll keep forming my opinion. But do let me know in the comment section what you think about your opinion on this, and because a lot of people would be more closer to the industry than I am, and I'm purely reacting on what the investor presentation is. And definitely the investor presentation will have a more positive tone towards the company, but I would love to hear from folks who are within the business as to what they think about the business and what are some of the challenges that there are. So the promoters currently have 32% stake in the business. Some of the DIIs have some of the major stakes within the business. The Mire Mutual Fund and those kind of things. Kuwait Investment Authority was one of the big investors. Life Insurance Corporation is one of the big investors. So yeah. And this is the associate company we're talking about. So Snowman Logistics currently is an associate company, and Gateway Distriparks holds 45.24%, has bought 4% within this fiscal. And Snowman is the largest integrated temperature control logistics service provider in India. It has a nationwide network of temperature controlled warehouses and a large fleet of refrigerated vehicles. So this just goes to show how the economy with a fillip to one sector can have a fillip to many sectors. For example, if it is a network of temperature controlled warehouses, electricity becomes of prime importance, and some of the electricity generators and transmitters have a huge impact to play on how the economy shapes up. Dedicated freight corridor also has a huge role to play in how the economy keeps adding value. So that's it from my side on this edition. I'll end it at here. Do let me know in the comment section any other company that you want me to look at. I haven't gone much in detail about the financials, but I think those would be easily available. You can go through them to analyze on those. Do let me know any other business that you want me to look at. Thank you, and have a great day ahead.